and welcome to the show. Today is December 12th, 2022. And let me start by saying I'm not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. Today, this presentation is called MMTLP, the FinraFraud Fiasco continues, because it's Monday. And before we start, I'd like to give a big shout out to Ali. Trading Secrets, he made an excellent video yesterday, I believe, where he talked about possible scenarios of what's going to happen with MMTLP and next bridge hydrocarbons. Check out his video, and big thank you to Ali for making this video, because he said some things that needed to be said. To fully understand what's going on, though, I think we need to recap the story. And recapping the story will clarify things, I think, because the situation has become very muddied, and there's been a lot of noise out there, and it's kind of hard to tell what's going on and what needs to be done and what's going on. Yeah. So anyway, I'm going to recap the story because I needed to do that, and I needed to make a diagram for myself to fully understand it. So here's what I see. There's a company called MMTLP, okay? They have some oil and gas assets, and they want to spin out a private company called NextBridge Hydrocarbons, okay? This private company will be distributed to shareholders of the Series A preferred shares currently trading under the stock symbol MMTLP, right? In order to do this, they need to work with the SEC, and because they want to spin out a private company, right? So they figured out that they wanted to spin out a private company. They worked with the SEC to do this. The SEC needs to be involved because the stock symbol MMTLP is currently trading on a public market, okay? So there are 165 million shares of NextBridge Hydrocarbons, and there are 165 million shares of MMTLP. So there will be a dividend issued 1-for-1 for each dividend. There will be a dividend issued 1-for-1 for each share of MMTLP that was issued. There will be one share of NextBridge Hydrocarbons, right? Keep in mind, NextBridge Hydrocarbons is a private company. What that means is it's not tradable on any electronic platforms, okay? Private company. MMTLP is currently tradable on electronic platforms, or it's been halted, but it was tradable on electronic platforms, okay? You could buy MMTLP through the broker-dealers. 165 million shares were issued by MetaMaterials. So broker-dealers have shares of MMTLP that are directly registered with AST, the transfer agent, okay? So they have a set of shares that they have for themselves. But in general, shareholders who have shares are usually what are known as beneficial shareholders of MMTLP, because the broker-dealer has the shares themselves, right? And shareholders are beneficial shareholders. The broker-dealer shares are registered with AST. Now, you can decide not to be a beneficial shareholder and decide to be a direct shareholder, right? So you can take the shares that have been registered with AST, with the broker-dealers, and directly register them with the AST. And that's what people have started doing, right? Because there's no point. It's a private company. You won't be able to trade these shares on a public platform. Okay. So hang on. So that's what's going on in that respect. Let me hit OK here. Okay. Next. So NextBridge Hydrocarbons will be issued as a dividend to MMTLP shareholders. But not only that, the MMTLP shares will be deleted at the time of the dividend. Okay, at the time of the NextBridge Hydrocarbons dividend. So they'll be deleted. They'll cease to exist. That is the plan. That was approved by the SEC. An S1 was filed with the SEC, which detailed the plan out in detail, and a 424B was filed at the end, which included the actual dates that this would happen, right? It includes the dates of record. All the dates were filled in with the 424B. That was the last update. So all the paperwork to do this has been done with the SEC and approved. So in this case, the SEC has done a good job, okay? I think that the SEC has worked with MetaMaterials, and they are to be applauded for this. They have done an excellent job resolving the situation as far as the SEC is concerned, right? Securities Exchange Commission. Great. Terrific. Now, to issue out the dividend, there needs to be a date of record and a date of distribution. And they also need to stop the trading of MMTLP shares and delete those shares, right? So in order to do that, the SEC is not involved with that. Instead, that information, well, they're not involved to an extent. The information has to be given to the SEC, and the SEC has to approve that information. They have to check that the dates make sense, that everything works out. Once that information is done, an order has to be issued to an NGO, a non-governmental organization, which is a non-governmental regulatory agency called Finra, okay? And the date of record, the distribution, and the clearance has to be given to Finra. Once Finra gets that information, they need to issue a corporate action notice to the broker-dealers, okay? And Finra took its time with that. Finra was a little bit late on that. I don't give top marks to Finra on that. I say Finra has been, they've waited a long amount of time in order to get that done, right? They had about, I don't know, half a month to get this done. All they have to do is, well, regardless of what all they have to do, they have to issue a corporate action to broker-dealers. They took a fair amount of time to do that, and but they did issue that corporate action, right? So, okay, let's move on. In addition, Finra has to communicate with the DTC or the DTCC, I forget which one, but they have to make it clear that the shares are not tradable on the DTCC platform, right? So they have to do two things. They have to clear or make sure all trades are settled. So they talk to the DTC, make sure all trades are settled. And then they also have to tell the DTCC that, you know, stuff will not be settled on your platform. Great. That works too. And in return, the DTCC has to work with the broker-dealers then at that point to make sure that that those points are cleared. Okay. So all of this is known now at this point, right? So Finra issued the corporate action, work with the DTC. Now, why is it important to worry about clearance? It's important to worry about clearance because you want to make sure every single shareholder will get the shares. Okay? Why is this a problem with this picture that I just outlined? Because there's an additional point to this picture. The broker-dealers have directly registered their shares. Okay? Their shares in... the broker-dealers have registered their shares with AST. The shareholders are also have directly registered their shares with AST. This picture is not quite complete, though, because the broker-dealers have two types of shares, actually. They have shares that have been issued by metamaterials. These are the Series A preferred shares. They also have phantom shares. What are phantom shares? Phantom shares come from a short position. What is a short position? A short position is taken by individuals, we call them shorts, who owe shares. What? How can you owe shares? What you do when you take a short position is you sell something that you don't own, hoping to buy it back later at a cheaper price, right? Instead of taking a long position where you buy something and then where you buy something at a low price and you hope the price goes up and you hope to sell it at a higher price, shorts buy something at the current price and hope to sell it at a lower price, right? And they pocket the difference. So as a result, what they do is a phantom share is created from this short selling, a share that did not exist before, right? And it gets pre-sold. So it gets pre-sold and cleared. So if you are a long shareholder, you may have a short share. Chances are you do have a short share. But it doesn't matter because it's treated the same way. The shorts have a negative ownership of shares, right? But they have phantom shares. Phantom shares are created, right? So if you... and you as a shareholder will have them. So the shorts have a negative position. They need to buy a share in order to close their position, right? Because they've already pre-sold the shares. The shares have now cleared. They've gone through clearing. You as a shareholder, if you're a long shareholder, you've bought a share from the shorts. If you waited a certain amount of time, 3 days, your shares are cleared. You own your shares out in the clear. But the shorts may owe a share to the broker-dealer in order to cancel out that phantom share. Okay, they should not have a problem with clearance because they just need to clear out their position. They need to clear out the phantom share that was created, and that phantom share needs to go to zero, right? So that's all that needs to be done. When you do this activity of a short, you take on what's called infinite risk. What do I mean by that? This is Finance 101, by the way. If you take a short position, if you sell something that you do not own, okay, the most you can make is the price of whatever it was that you sold, right? You can make 100% profit in that sense. You sell something you don't own. But the most you can lose is if the price of that thing that you sold goes up in time later. The price can head towards infinity. If the price skyrockets, you still owe that item, which has a very high price. So your maximum loss is actually infinity. This is Finance 101. Shorts are supposed to be financial experts, and they're supposed to be accredited investors and all that. They're supposed to be knowledgeable about Finance 101. Okay, I shouldn't have to tell shorts how their short position works. But anyway, shorts have a possibility of infinite risk because the share price can go up significantly. Let's get back to our original story now. What's going on? Our story is that the DTC, right, needs to make sure all shares are cleared, and in order to do that, they need to send a corporate action to broker-dealers for shorts to close their positions, right? Because you can't have more shares than exist because you have to have a dividend that's actually going to be sent out, right? So the DTCC at that point needed to send out corporate action for shorts to close their positions. I don't know if that ever happened. Instead, something else happened. We had a trading halt with a code U3, unexpected event. And the transfer agent, AST, said, hey, all 165 million shares have been registered. All 165 million shares have been registered. That's the current belief, right? So what happens now? Well, the broker-dealers are actually on the hook because they need to issue out a dividend. Okay, the broker-dealers have phantom shares from short positions. They have issued shares, right, from the company MetaMaterials. They have shareholders who have a long position in MMTLP, but they can only get as many dividends, as many they can only get as many Nextbridge Hydrocarbons dividends as exist from AST. So the broker-dealers do not have a problem right now. The broker-dealers have a future problem, right? The future problem the broker-dealers have is they must deliver a Nextbridge Hydrocarbons share for each MMTLP share. That's the future problem. It's not a current problem. They don't need to deliver it yet. They need to deliver it in the future. That future is just a few days away. Okay. The broker-dealers actually have a choice now at this point. They can buy back the shares from the longs. Okay, that's one choice. And if they take that path of action, the question comes up: who pays? Do the shorts pay? How much? Can they? And the question comes up: will they close a short position? Whatever. But in either case, choice one is to buy back shares from longs in order to have enough shares to distribute. Right. The other choice is choice number two, is they can buy additional shares from MetaMaterials. That's what Ali talked about in his video. That's why I said check out his video. It's important. But the broker-dealers actually have only two choices. They can either buy back shares from longs, or they can get additional shares from MetaMaterials. Those are the only two real choices they have. What have we been concerned about as shareholders? We've been concerned about a minutia detail. We've been concerned about fixed price. We've been concerned about fixed price or market price. That's what we've been concerned about. We've been concerned about who has to pay and all that. I don't really care who has to pay. I just know that I have to get my Nextbridge Hydrocarbon shares from the broker-dealers. Now, could the broker-dealers force a close position of the shorts? Sure. Could the broker-dealers force the shorts to cancel their shares by buying back their shares? Yes, they could. That's their choice. That's the choice of the broker-dealer. Okay. Could the broker-dealer try to instead of force the the market to be open or force the shorts to close their positions? Could they try to buy everyone's shares back at a fixed price? They could. Yeah, that's their choice. Okay. Do we have to agree to selling our shares? No, we don't. But the choice that the broker-dealers have is only to either buy back shares from longs or to buy additional shares from metamaterials. That's the only choice that's available to them, really. Whether the case of buying shares from longs, whether that's at a fixed price or market price, that's what my last video was about. My last video was about the possibility that the broker-dealers might want to do a mass buy or arrange a mass buy at a very low price from longs and clear the books that way, sweep the whole thing under the table. And I hope enough people saw my last video or my second to last video where I talked about I would be reasonable and I would accept $1,000 a share. Okay. In two videos ago, I said I would be reasonable. If you're coming to me to buy back my MMTLP shares, you can have it at $1,000 a share. If you're coming to me in order to buy back my right to an NextBridge hydrocarbon share, I'm reasonable. I can sell you that right for $1,000 a share. That's fine with me. Okay. That's my reasonable price. Okay. Other people have been saying you need to open up the market, which means you need to coordinate with Finra, open up the market, let the market resolve this, figure out what the price is, let the price go high, force the shorts to close. I don't really care. Shorts can close their position, shorts cannot close their position. My problem is right now with the broker dealers, because that's who I interact with. I don't interact with shorts directly. Okay, broker dealers interact with the shorts. Broker dealers can push the shorts. They can decide that they don't have to pay their money and force the shorts to close their positions. They can do that on their own. But that's not my concern. My only concern is to get NextBridge hydrocarbon shares. Okay. That's the only thing I'm concerned about. Now, option number 2 that the broker dealers have is the option that Ali brought up. I did not talk about that option before. I knew about that option. I did not talk about it before. The reason is I wanted to empower corporate management. I wanted to empower the board of directors, George Palakaris, and the people who would be involved in the negotiations for option number 2. So, board of directors of MetaMaterials, Greg McCabe, George Palakaris, people who were involved. You know, or you hopefully should know now at this point in time, what price shareholders would like to get at a minimum and what is considered reasonable for the rights to NextBridge hydrocarbons shares. Okay? You know what we want. I trust you to work in our best interest. Let me repeat, I trust you to work in our best interest. I know that you are honorable people, and I know that you will help your shareholders because it's not just your duty. I know that you have honor, and I know that you will do what the right thing is. So I fully trust you, okay? And I would like to further state that we would like a significant, we would like to make sure that there is a significant cash dividend that is paid out to shareholders if we get NextBridge hydrocarbons shares. Because shareholders previously had the option to sell NextBridge hydrocarbons shares to shorts in exchange for cash. We do not have, if a deal is brokered between the broker dealers and metamaterials, I'm not against that deal. You can work out that deal if you need to be. It's perfectly fine with me. But just keep in mind that the option for shareholders to receive a cash payout has been removed from the table. So please ensure that there is a significant cash payout to shareholders. And that cash payout may be significantly more. That means that you may charge significantly more than the intrinsic value of the assets. Let me repeat that. You may charge significantly more than the intrinsic value of the assets. You know this because you wrote in the S1 that the price of a share may increase to be significantly more than the intrinsic value of the assets. Okay? So that's what we expect. We trust you. We know that you will work in our best interest. And that's just the way it is. I hope that my videos have empowered you to negotiate from a position of strength so that you know and you can clearly state where you can go with this. And that was the intention of my videos from the get-go. And that was why I never mentioned the possibility that broker-dealers could come to you directly, right? Thank you to John Berta for mentioning that at some point that broker-dealers could come to MetaMaterials directly and ask for that, and you indicated what your default reaction would be, and I applaud you for that. And I am furthering my voice, and I hope I speak for a large number of viewers and a large number of shareholders that this is the case. You can check my view count. You can check if I have thumbs up on this on YouTube. And if you watch this video and you agree with the fact that I have empowered MetaMaterials to speak from a position of strength, please give this video a thumbs up and please share this video. I don't ask anyone to share a video before, and I never have. But the purpose of this video is to empower MetaMaterials board and to empower George Palikaris and anyone else who may be negotiating on our behalf to be able to negotiate from a position of strength. Okay? That's the end of my video. That's all I have to say today. I really believe that at this point, the only thing we as shareholders have to worry about is when do we get paid. The main problem is that broker-dealers have to figure out where they can get additional shares from, okay? It's not really our concern where they get the additional shares from. If they come to us, it's our concern. If they don't come to us, then if they try to do an end run around to MetaMaterials should know the prices that we want, and yeah. That's basically it. So I hope this video has empowered the board of MetaMaterials, and I hope everyone likes and shares this video. Thank you very much. With that, I'd like to end this by saying I am not a financial advisor. This is not financial advice. This information is intended for entertainment and educational purposes only. It is December 12th, 2022. The title of this particular presentation is The FinraFraud Fiasco Continues. It is Monday, which is the date of record. Goodbye.